Hello and a warm welcome to the Open Treasury podcast, your go-to source for the latest news and analysis in corporate cash and treasury management. This show is brought to you by CTMfile.com and the Treasury News Network, where treasury professionals learn and share the information that matters most. Tariffs, the powerful word dominating boardrooms and rattling the global economy, is also pushing Treasury to the front lines of corporate strategy and leadership conversation. According to FactSet, a financial data and analytics company, over half of S&P 500 companies mentioned tariff or tariffs in their earnings calls between December 15, 2024 and March 6, 2025, more than in any other quarter in the past decade. In this episode, I, Pushpendra Mehta, your host, am joined by Craig Jeffery, Managing Partner and Strategic Treasurer, to explore how treasurers can prepare for tariff-induced risks and uncertainties, especially the unknowns. A very warm welcome to you, Craig. Thank you for taking the time to join us and share your valuable insights.
My pleasure, Push.
As treasurers and their teams brace for reciprocal tariffs, bottom line, a global leader in business payments and cash management, and Strategic Treasurer, a leading treasury consulting firm, have partnered to launch a flash survey aimed at capturing real-time Q1 2025 data on how treasury and finance professionals are thinking about new and potential tariffs and how they're responding to the evolving tariff landscape. Titled 2025 Tariffs and Treasury, Measuring the Impact, the survey provides a comprehensive industry analysis, helping ascertain monitoring efforts, levels of concern, and the strategic actions being taken to manage tariff-related challenges. I'd encourage our audience to download the 2025 Tariffs and Treasury Measuring the Impact Survey report by visiting strategictreasurer.com. Craig, one of the findings that really stood out to me is that more than 2/3 of companies, or 68% of respondents, have been actively preparing for tariffs and their potential impact. In light of the survey data, what kinds of steps or measures have organizations taken so far to prepare for tariffs?
Yeah, it's not really too much of a surprise that the majority of companies have looked at tariffs and how that will impact organizations. It was long promised on the campaign trail, and then, post-inauguration, the activities moved sharply to put in place tariffs, to mention they were coming and to follow through on that promise, and we've seen that take place. And so, as you mentioned, over 2/3 have done things. The biggest thing that companies have done, and it's almost exactly half of companies, have identified their risks or exposure. So when you think about, hey, there's volatility in this space with tariffs and potential of disruptions to the supply chain or the cost of goods are larger, they've identified risk or exposure. So that's half of all. And so essentially 2/3 of those that have done something have looked and identified their risks. That's the first measure of risk assessment. So where are we exposed? What does that look like? The second area, Push, is that they've gathered information. They've added monitoring or more frequent gathering information, data, and news. And you had mentioned the percentage of companies that have mentioned tariffs in their earnings report. I think it's excellent that we can use AI, pull this information out, how many people are talking about tariffs, those COVID some years before. And so we've seen those as two key things that organizations have done. This discussion, the topics of discussion have been quite common. 3 out of 10 or 30% of companies have had meetings or calls on the topic of tariffs. So we might think that it would be more than that, but they've had calls and discussed it more broadly. Another interesting factor, and this ties into Treasury and relates to your question, is 1/4, 24% of companies have run models or different scenarios. What will happen? And there's more things that have been done, but those are some of the key items where a significant minority have taken certain steps in light of the promised tariffs and the tariffs as they're underway now.
Thanks, Craig, for shedding light on the specific steps organizations are taking to prepare for tariffs. The survey report also highlights that the majority of companies have already observed specific impacts from tariffs. In this context, what are some of the key tariff impacts experienced by organizations as reflected in the survey findings?
The first one, the largest item that was identified was companies have made specific changes. They've changed their approach to manage their exposures, right? So that's a first step. That's 29% of organizations. So they've determined an approach to it. So that's number one. Number two is they identified a need for more working capital. The margin of capital you have helps you weather storms. This makes perfect sense from a Treasury perspective, and that's 22%. 2 out of 9 have done that. It's already impacted costs of about 1 in 5. So preparation for tariffs means that costs are going to go up, and so people are already seeing that happen. Two factors that came in with 1 in 6 companies identifying it, Push, are they've executed trades or hedges to manage their exposure. So they've used financial instruments. And another 6 are shifting or considering shifting their sourcing to alternative suppliers or countries. If things are going to get more costly, as quickly as you can, you're going to immediately source from perhaps a lower tariffed economy to keep your costs lower. That's significant. And 14% have changed or are planning changes to their inventory management strategy. And so that's fairly quick. We're in April, and companies have changed their inventory strategy. So if you think back 20 years, there was this just-in-time inventory. You don't want to tie up your capital in inventory. You want to pay for it like 30 days after you put it into your, if it's a manufacturing process, you put it into your manufacturing process. And then there was the just in case. When there was disruptions, people were stockpiling more just before the tariffs. They were trying to pull forward some inventory, which is a way to react to that. So those are some of the key areas of the impacts of tariffs that there's been an action on.
Now, Craig, as we all know, the tariff rollout has dampened business and consumer confidence, triggered stock market volatility, threatened to disrupt international trade, and raised concerns about corporate earnings. This is likely to amplify economic uncertainty and make the CFOs and corporate treasurers' jobs even more complex and challenging. In such an unpredictable environment, what strategic actions can treasurers take to navigate the uncertainties, particularly with so many unknowns at play? Also, if I may, how can treasurers effectively monitor, analyze, calibrate, and execute in a world of growing business unpredictability?
So I haven't been elected to speak for all of treasurers, but I will say, in many conversations and the risk mindset, one of the things we see every time there's some type of dislocation from a financial crisis, COVID, supply chain disruption in the U.S. every 4 years when there's an election, there's an aspect of uncertainty. And what does that do to the finance realm and to business leaders? They get more cautious. There's concern because there could be a change. And so we saw that. You saw that in 2024. We saw it in 2020. We saw it in each of these periods. And so there's a natural tendency to prepare. Once that passes or once things stabilize, after an election, who's in power? Is it favorable or unfavorable to our industry? If it's favorable, that's awesome. If it's unfavorable, then you're trying to make adjustments for it. But for the vast majority of companies, are like, now we know what's going on, and we move forward. So too with something like tariffs, you may know there's going to be interruptions to your business. You may be in the middle where it's like, I don't know if it's favorable or unfavorable. You may be in particular industry, and I'll throw out industries related to steel or aluminum or auto manufacturing, where there was a number of promises made on the trail, and the Trump administration is going to follow through on those promises to, I would call it, to protect those industries, or to, what they would refer to as level the playing field for those. So those are going to be in favor industries. Others, maybe not as much. They may feel something that's a little bit more negative. So across the board, you have this uncertainty. And so once you return to stability, people know how to operate. It's harder to operate when there is uncertainty. So I think that's one of the key factors, or how long is this going to go on? It's certainly going to cause disruption. We saw the 3-day period of a hit on the equity markets, unsure what that's going to do. Is that going to put us into a recession? If people have their money in their investment accounts, they see a drop and dip. If you don't have a long-term view, it gets extremely disconcerting.
So in such an unpredictable environment, Craig, from a treasurer's perspective, what strategic actions can you recommend that would help them navigate the uncertainties, particularly with so many unknowns at play?
Yeah, so whether it's strategic or tactical, there's a couple things. So if we think about what many treasurers are doing, the CFOs are doing, they're monitoring. They're monitoring what's going on. And you saw that in the statistics of how many companies are looking and seeing what is our exposure, what's occurring. People are reading the news more readily. If you look at the survey report for this, people are very active in pulling news and data to see what's going, to be able to make closer adjustments because it's changing so rapidly. So this monitoring aspect is key. And part of that is related to automation. So when you think about what's going on, there's a concern about changes in cost. There's also a concern about how am I going to know and see where my cash is? How am I going to move and adapt quickly to those changes? So automation to say, where are all my funds? Where are they moving? How is this going to impact my business if the tariffs increase on Thailand or Thailand comes out of it more quickly? Am I buying from them? So some of the elements of being able to see where your suppliers are, your different trading partners, and what's going on economically, the automation aspect matters for core treasury, for your supply chain across the board. When there's a certain level of risk, there can be a panic. If you hear a storm because there's or tornado going to drop down, you head to the basement, you immediately block things in. Not everything is a tornado above your house, above your home. So calibrate what are your exposures, what's the likely outcome, and make adjustments. Now, you had mentioned about this idea of when you don't know what's going to go on. Now, we can certainly make guesses. Like if someone can say, I have no idea what's going to occur. What's the result going to be? Is there going to be a tariff war? They're going to escalate 50% a day for 6 days in a row. What will that do? Will that plunge us into recession? We can make the variability too wide. You know, we're used to if you roll 2 die, you'll average a 7, but it can be 2 to 12. So how do we put borders on some of those items? So this ability to calibrate matters. And I gave you an example of, depending on the industry, you might have some guidance as to what the volatility might be within tighter limits, as opposed to say, we know nothing. We do know some things. Now, when it's very uncertain, it's very hard to be very specific, but steel, aluminum, if you're in the United States, those industries are going to be in pretty good favor because they're going to be able to sell, because all the other steel aluminum is going to be very expensive for people selling into the U.S. Those that are producing it are going to do quite well because they'll be maxed out in what they can produce. They're going to be scaling. If you're a user of aluminum or steel, now you're going to be paying more, and so that's going to impact you that way, and so on and so forth. There's items where there's a range of expected activities that are very likely, and some that are more uncertain. Like we've seen in a few days, the Trump administration added a significant tariff to China. China retaliated with another tariff and fulfilling his promise. Don't put more tariffs on us. We'll retaliate very severely. And then, as of this recording tomorrow, there'll be another 50% added to the tariff, reaching over 100% tariff on a huge portion of goods from China. So, yeah, those are some areas that there's more volatility there. So where's that coming from? I think the other aspect, too, is the sourcing of all the goods and materials comes across from some different places. Now, you had recorded a video and had written some papers about China plus many. This idea of companies and organizations and countries are sourcing from more than just China. Now, if this was 2 years later, there might have been a lot more sourcing, but that shift had been in play for a while. And so pulling from other areas and sources is certainly making a difference. But calibration, understanding the level of risk, making sure it's in a reasonable range, right? You can't know for sure, but we just can't say it's from 0 to 1 million. It's going to have a range. And then executing, specifically taking steps to trade, to put in place financial instruments, to do the core functions of forecasting, managing your cash, managing your working capital, making sure you have access to credit. All of those core functions of execution need to take place. So those are 4 things that most organizations are doing.
So you mentioned effective monitoring, analyzing, collaborating, and executing. Those are critical. How important is the ability to adapt in an uncertain environment?
Well, if we use the experience in handling the unknown, whether you're in a boat, what's that quote? Smooth seas never made skilled sailors, right? Because the storms help you adapt. There's a scouting truism that you need to be prepared. And the scouting motto is be prepared. And the question is, be prepared for what? The question was asked of the founder of scouting. And he responded, be prepared for anything, whatever comes your way. And so there's an aspect of adaptability. And then that makes you think about it for a second. It's like, how can you be prepared for anything if you don't know what it is? And so the point is that you have flexibility, you're adaptable, you can change. And they use the 10 essentials for the backcountry. So if you're going hiking, make sure you have things that can protect you from the elements, that you have water and a way to get water, right? That's far more important than food, right? The ability to start a fire, some method of achieving directions, like all of those things set you up for success, gives you a way to get out of there, to provide for some type of first aid, to keep yourself warm, to keep yourself, so you don't dehydrate. All of those factors give you, those essentials give you the tools to be able to adapt to those unexpected situations.
I want to ask you a follow-up question, Craig, about this very intriguing quote of yours in an article that was published on CTMfile about Treasury and tariffs. You mentioned that from a risk management consulting perspective, you advise corporations, and I'm going to quote you, which is to the extent that there is significant uncertainty, whether from pending elections or tariff battles, corporate finance departments have become increasingly cautious. They seek to operate within a range of expectations, and when it is difficult to determine that range, they assume an increasingly wider set of potential outcomes and must assign risk weightings to various potentialities as best as they can. Companies that can better calibrate those individual weightings are able to better reduce the overall range of economic impact they need to address. Can you expound on that?
Sure. Maybe that's how I should have answered the question you asked. That example of when we're unsure, the range gets larger. And if you think of a normal distribution curve that's going out, or even an abnormal one, maybe one that's narrow and very high pointed, and if we're using dice, right, let's say it gives you a range of 4 to 9. Okay, that's what you're expecting. Not so much variability. But when things vary significantly and we don't know where to put the borders are, with dice, we know I can get a 1 or a 6. If I have 2 of them, my range can be 2 to 12. But if we're pushing those out to think what can happen with the cost of goods, with the overall economy, now my models get extremely wide. And so to the extent that we can limit some of those factors and keep the ranges in within a tighter distribution or within a tighter band, then we're not stretching this distribution curve or this probability curve out so broadly. And I think that's the point of the more we can narrow some of those elements down, the more successful it is for us as we're looking at running these models. We need some ways of pulling in some of the borders where we can make those calls.
Moving on, according to a flash survey CNBC circulated among members of its CEO Council in the days following President Trump's sweeping tariff announcement, 69% of CEOs said they expect a recession. With the added risk of retaliatory measures from other nations that you mentioned, do you think, Craig, this could fuel inflation, lead to a recession, or even stagflation in the economy later this year? Or do you have any other thoughts around this in terms of pressing concerns for treasurers?
I think the big concerns are that it can lead to inflation, could lead to a recession in areas. If you look at what some of the JP Morgan economists have said, they've downgraded their estimate for GDP growth, gross domestic product growth in the United States, from 1.9% to 1.6%. And that was before some of the extra things over the last couple of days that occurred. So I would expect them to pull that back a little bit further, right? Things get more costly. We've seen people liquidating U.S. Treasuries to pay for demands that they have, and so that's created the sell-off. Not everybody wanted to buy them, and so that's increased some of the rates that we've seen. So there's certainly more volatility. It's a very significant time frame. It's not unreasonable for people to be more pessimistic, particularly over the short term. There's changes, and there's this shouldn't be as much of a surprise as many of us have taken it to be. These are things that Donald Trump said during his campaign. He said through the years he wanted to make adjustments and, in his view, fix these things. And he's not one to do things over a long period of time. He addressed some of these during his first term, and some progress was made, but for him, that was very little over the period of time. And he's very eager to get things fixed on the trade deficit side, how he sees deficit. So I think as we're looking at it, we're not as surprised after a few days of thinking about it now, where you start to see some of the dislocation. People are like, yeah, we should have thought he's going to move things rapidly. He doesn't move slow. He moves dramatically. Some of us have read The Art of the Deal, right? He wants to put things in a position. So how is this going to work out if the U.S. is doing these, putting on tariffs on, over 100 countries, right? Trillions of dollars of trade is being faced with more and more tariffs. What does that look like? How will that play out? So I think as we look out over the next few weeks, is this going to create tariff wars, pull back on equities? What about inflation? In other areas, is it going to create a recession, joblessness? Is it going to lead to that? Or is it going to play out differently? Is it going to be that there's countries are going to come to better trade agreements more rapidly? I think Israel and Japan and the U.S. are already talking. I know in the news there was 50-plus countries that they had said were already lining up to try to work out better trade deals. And as you look at that, there's quite a bit of variety. It becomes trade wars, recession, inflation, or rapidly resolving some of the imbalances that exist and coming to something that's very amicable over a long term. Now, any of these changes to something that might be considered more fair long term is going to be challenging for some economies, some for us and some for other economies. So that'll be really interesting to see how that plays out. Is there going to be one after another come to a settlement? And that might create a very rapid result of improvements and back to normalcy? Or is there going to be major battles, the U.S. and Europe and China, huge trading partners in Vietnam, or are they going to get resolved quickly in a way that's very effective and helpful for the global economy as well as the individual economies that are part of it? So I don't know that I answered your core question, but there's variability for very negative and positive.
So we've been talking, most people are concerned, or the focus is more on the negative aspect of tariffs. Is there, barring what you've just mentioned, any other positive impact, particularly for the U.S. economy, not in the short term, but in the medium term or long term? Would there be some positive effects that would come out of this tariff rollout?
Yeah, I think that's the goal. The Trump administration has been very clear that what they want something that's considered fair. Now, we can all have different ideas of what's fair, and people can argue about 0% tariffs are not good for any. Other countries use tariffs to fund some of their social programs or other activities. So there's a number of factors, and I don't want to oversimplify that. I don't think I can oversimplify that, or we can certainly overcomplicate it. I don't know if you've ever played the game Catan, where you're trading materials. And how can you win at Catan? There's an aspect of games where there's a winner and the rest who lose, and that tends to be a zero-sum game. The one person at the end wins because they got a certain number of points. Now, that's not true in economies. We have laws of comparative advantage. You may be better at manufacturing something. I'm better at providing these services. Someone else is better at that. And so there's a way of more trade tends to be good. But the trade needs to be close or reasonably fair. And, you can win at Catan, not because every single trade and every single deal you do is you win and the other person loses badly. You want to make sure every trade's good for you, or it's at least a net positive, but you want to trade more. If you trade more, you're doing well. If every trade you do advantages you to some extent, even if it's beneficial to the other party, then you're going to do better than someone who's not trading as well, because they have materials you need, or they have the law of comparative advantage. And so to the extent that we remove those direct tariffs or barriers to trade, that will help each economy do better. And I think that's where I am at a personal level, how we look at the economics, that if we can remove those challenges to trade, and I know there's issues you have to do for national security, et cetera, but if you can take those away, it can be a much better environment for everyone. The Trump administration is concerned about the U.S. Europe and individual countries are concerned about Europe. China's about China. Everyone's concerned about their own area, of course. And so to the extent that we can move in that direction, that's better. To the extent that, no, we're not trading anywhere, there's no law of comparative advantage, it just ratchets up a defense, that would be overly negative as we extend out on the horizon.
Well, you made some great points, Craig. Is there anything else that you'd like to add before we end this podcast episode?
I would just say a couple of things. One is we found it really fascinating to do that research with Bottom Line. And that report doesn't have many questions, but it's really interesting to see how people have responded so early in the process with tariffs. I hope we can repeat that. We had a lot of requests to, can you repeat it monthly? Most people settled on, let's do this quarterly to see what's going on with tariffs. I hope we can do that. I think that's one of the key things. Secondly, as we go through this particular situation, like we did with COVID and capture data through the process, these things I find they fuel my understanding as a research firm, how we respond and how we can learn from past events. Even though they're not the same, there are certain ways we react and we adapt quickly. So I would just say stay adaptable.
From your survey findings, one of the things that companies are investing in to mitigate the risk of tariffs is hiring consulting companies or consulting services or taking advantage of data services. From a consulting perspective, do you have anything that you think consulting companies, not yours, but any other specific Treasury-related consulting services that they could take advantage of, corporations, in terms of hiring consulting services?
The key preparatory or foundational activity is we use the term the 10 essentials or whatever the essentials are, whether that's driven from consulting services or understanding that you have the right tools to be adaptable. So do you have the tools to monitor where your exposures are, where your cash is, how those things are flowing so that you can more rapidly adapt and perform analysis quickly? If you're using other people to help prep those things or you're using the technology and putting that in place, you are far more flexible and adaptable than others. Your analysis will help you respond more appropriately. That's foundational.
So those are wise words. Monitor, analyze, calibrate, execute, more importantly, adapt. Craig, thank you so much for your valuable perspectives. And to our listeners, thank you for tuning in. If you found today's discussion useful, please subscribe and share this episode with your network. We'll be back with more thoughtful conversations on the evolving world of corporate treasury. Until next time, stay informed and stay ahead. Thank you. This podcast is provided for information purposes only, and statements made by CTMfile or guests on this podcast are not intended as legal, business, or consulting advice. For more information, visit ctmfile.com.